Welcome to Unboxed. I'm your host, Connie Nam, the founder of Astrid Miyu. In these conversations, I speak to the founders of some of the most innovative, bold, and exciting businesses to discover the person behind the brand and what it took for them to build their empires. Hey guys, welcome to Unboxed. This is Connie, your host and founder of Astrid Miyu. My guest today is Daina Spedding. Daina is trying to put more money behind female-led businesses, and she explains how she's trying to close that gap.
I think it's actually better to walk away and do a bad deal. We have invested 420 million in female-led businesses since 2011. Be bold, follow your dreams, surround yourself with people who make you strive and don't give up.
Yeah, Daina, thank you so much for being here.
Thank you for having me.
Yeah,
Really happy to be here.
I'm so excited to have our conversation around female entrepreneurs and female investors today. So tell me a little bit about yourself and your career background.
So hi everyone, I'm Daina. I have been investing for around maybe 13 years. Moved to UK 18 years ago. Before then I was a bit in consulting and a bit in media, so I have been working maybe for around 20 odd years. And as you say, I'm a massive champion for women, both in terms of women leadership and also I work for BGF, and we are the most active growth stage investor in female-led businesses in the UK. I think we have invested 420 million in female-led businesses since 2011. So it is my personal passion. It's actually my job to do more of it. And I am really keen to do more and kind of help hopefully change the whole ecosystem and industry.
Wow, that's amazing. Before this conversation, you touched upon briefly about the D&I initiative that you have at BGF that you're running. Can you tell me a bit more about that?
As I guess organization, purpose is really important, and we are all about what they call good growth. And it has, I guess, various sub-elements. We have established diversity action group internally, which actually have representatives across all teams, not just investment teams, but also support functions across different regions. We have teams on the ground across UK and Ireland, and separately we also now have funds in Australia and Canada. So the story of BGF has spread around the world. And I guess the whole purpose of that group is to encourage not just conversations, but come up with very much actions and priorities how we can become a more diverse organization ourselves, how we can help change and improve the industry, how we can unlock funding to more diverse founders, and how we hopefully can be a role model to other organizations like us. Because as you can imagine, if the whole ecosystem works together, the change happens much sooner. We're also signatories to investing in Women Code. We share data with Scale Institute. So there is quite a lot of not just talk, but real data being reported and tracked in terms of how many businesses we meet every year, what founders they represent, which of the businesses we bring through to investment committees, how many investments we complete, so that there is real hard data to evidence that change is happening and improvement is happening, rather than just, I guess, what we hear, I think, a lot about market. Lots of people are talking about it. But when you look at hard data, I mean, it's 2-3% funding going to female-led businesses across the industry. It's still pathetically low.
Yeah, really low. And what are your targets? Do you have hard set targets by a certain date?
We don't have hard targets because, to be honest, it's a moving target. What I can say, and I think BGF averages 15 to 20%, depending on each year how much funding out of total we get into female-led businesses. We also obviously have started looking not just about gender, but in terms of background. If you are minority, Black, Asian background, I think the wider diversity really matters. It's not just about gender.
Absolutely.
And also, I would say that last year, for example, 70% of people BGF recruited across all teams were either women or from minority backgrounds. And in investment teams, it was 50%. And I have seen really strong correlation between the organization you build in-house. There's a direct correlation to what founders you resonate with, you build networks with, and you actually open up conversations with. I personally have led, I think, 8 deals since I joined BGF 4 years ago. Half of them are with founders from diverse backgrounds.
That's incredible. Very inspiring. And I read somewhere, this is really disturbing, that when an entrepreneur goes in to a pitch, female entrepreneurs are asked about how they manage risk, whereas male entrepreneurs are asked about vision and like what their growth opportunities are. Do you find this true, like anecdotally?
I would say it does depend who is on your investment team, also what stage the company is, and it's very hard to generalize, but out of I meet probably several entrepreneurs every week looking for funding. And I think over the years, you do get a sense that on average, I would say female investors are more risk averse. They would show financial forecasts which are less crazy or actually more deliverable. And they're asking for comparatively less money. And I think there's actually now research also which demonstrates that the funding which female-led businesses actually attract once it's invested, that it actually generates better returns.
Yes.
Obviously, it depends how you cut the data by region, by stage. Another, I guess, thing I can notice that companies where a woman is at least one of the co-founders or CEO, they tend to build more diverse teams around them. And I think that has direct impact because I think it's hard to say that, well, all female teams are better than all men teams. I don't think so. Actually, I think what matters is to have a diversity of thought. And it tends to happen, at least in my experience, that if there is a female leader, or at least co-leader, they tend to have actually much more diverse decision-making around key exec team, company's board. And it also often then resonates either angel investors or partners or funds they attract and build relationships with and raise funding from.
Yeah. And do you find the difference in the day-to-day interaction between female entrepreneurs and male entrepreneurs? Because you sit on boards of many companies, don't you?
I don't think there is like a clear difference in terms of interaction per se. I think it depends on subcategory or industry you are in, very much the stage of the company, because obviously if you are in a startup early scale-up mode, you naturally need a lot of help because you have not done it before. You have relatively less team to help you around you. So the founder wears a lot of hats, needs to problem solve every day. There's just lots going on. And then you just tend to probably communicate more often and try to open doors and just have probably also more informal relationship. As the business scales and you grow significant teams around you, you go globally and you perhaps have lots of voice around board table. There's perhaps independent chair, non-exec directors. It's not just me or another institutional investor. The relationship is still close and open, but I think dynamic changes a bit because you're just, I guess, at different stage of that journey.
Yeah. And just as context, at what stage of the business do you invest in?
So the majority of what BGF does and what I focus on are growth stage investing, where we write 2 to 20 million checks in businesses, typically doing over 5, often 10 million plus revenue. And we have also backed much larger businesses than that. We do have early stage team, which can go much earlier, even pre-revenue. Their core focus is either clean tech or life sciences. So we back kind of in that subsegment very deep tech companies which have very strong underlying IP.
When is the best time for a company to put in a board, implement a board? Obviously, like for me, when my angel investors came in, they naturally sat on the board. And then when my investors came in, they sat on the board. So it was kind of investment led. But is there an optimal time regardless of investment?
I guess I tend to see that most companies formalize it at the point when they raise first institutional capital, because usually it just comes almost as a requirement. However, I would probably encourage to, even if you don't formalize it, to really surround yourself with people who have been in your shoes, who have had successfully led, hopefully exited companies, who you can call upon, who can mentor you, who can you like ask questions and just be a sounding board, because I think I actually hear it quite often from founders and CEOs how lonely it can feel and how stressful it can feel. So I think even if it's not a formal board, just try to build relationships. And it doesn't need to be, I guess, thin and wide. Pick maybe 2, 3 people you trust, maybe a few other founders and few maybe people who have already gone on this journey and become non-execs, who are really interested in your success. Yes, sometimes you could maybe give up a tiny percentage of equity just so that they have skin in the game and they're really incentivized to help you. Or otherwise you can agree different kind of arrangement. But I think having that sounding board around you, which normally initially is kind of informal board or advisory board, and then it gets formalized as the company gets to scale. But I mean, I actually have huge sympathy with founders. I think we have had, I don't know, Brexit, COVID, two wars. I mean, God, no, God knows what else can go wrong. But I think ability to navigate these challenging times, which doesn't seem to end anytime soon. Now we have, I don't
No.
know, political uncertainty, and I mean, God knows what else. It just seems that you just, I think, need to surround with people who help you thrive.
Yeah.
Otherwise, it's just really hard and really lonely.
Yeah, I completely agree. If I were to take my time back, like I'd probably have an advisory board very early on. And what does a well-functioning board look like?
I'm a big believer that there needs to be a balance between, I guess, exec team who are responsible for running the business. And normally it's probably CEO and often CFO or FD. Sometimes there's other people like CEO or CMO or whoever is, I guess, core value drivers of the business. And then the other, I guess, flip side is non-execs whose job is actually not to run the business, but are there to ask questions, to, yes, provide hopefully healthy challenge and also support when needed. And I think what is very important is that non-exec pool, it's not just investor directors from, I don't know, whatever fund it is. Most investors in my shows, we are investors instead of operators. And yes, some of us and I have done bits in operations, but we can't claim to be better experts than you are actually in scaling business. We can bring different type of expertise and complementary skill set, but I definitely think it's useful to have operational scale-up experience, hopefully in your subsector or at least wider industry, from independent non-execs. And they ideally are not associated directly with investment from the institution or even from angels, but they are there to kind of provide the balance. And especially when things start to go wrong, when, I don't know, companies running out of cash or they need to figure out which strategies they take, or there's different priorities amongst different investors, to have that independence on the board and somebody who can actually get everybody reminded that you have fiduciary duties as directors to do what's right for the business, instead of trying to pull the blanket in your own direction, is really important.
I like that phrase, blanket in their own direction.
Yeah,
Really
I mean, it's
resonated.
obviously as the company scales. And I mean, I literally had a call with a company earlier today. They raised a lot of money from different institutions and navigating hard times because essentially most board meetings, different investors are just arguing amongst themselves.
Yeah, that's
It's
difficult.
not helpful
No,
for anybody.
not at all. And have you sat on a terrible board?
I mean, it's rare for every board meeting to be terrible. Most, I've been lucky enough that most boards I've been part of are pretty good.
Or it could be hypothetical, like something you've
hypothetical.
heard.
No, there's definitely been some hairy ones. And to be honest, I think the biggest pitfall there too. One is basically to get drowned in operational detail instead of actually stepping back and thinking about what actually matters, because it's actually exec team's job, and you can do strategy sessions or you can do detailed workshops if needed on a kind of more frequent basis. But at the board level, I think it matters to essentially think about strategic things and what really matters, instead of just get drowned in, I don't know, monthly trading updates. And I think second, I guess, is about this managing investor interests versus management interests versus what's right for, I guess, business and long-term value creation instead of short or medium-term decision making. And that, I think, often goes wrong, or especially in crisis situations. So having independence and people hopefully who have seen it before and kind of have gone through a journey and come on the other end. I mean, it's actually incredible how I think I have grown so much thicker skin last 4 or 5 years, because
We all had to.
Exactly, we had no choice. And I think even like how you handle crisis, how you handle stress, how you actually become more measured instead of, I don't know, replying to angry emails. You sleep on it, you think about it, you calm down, and then you reply in the morning, and the message is much politer and constructive. And yeah, I think sometimes throwing more fuel to fire is not helpful for anybody, especially if it happens in the middle board meeting and it gets really heated.
Yeah, absolutely. How do you measure from an investor point of view a strength of a brand? Do you have metrics that you measure? And how do you, I guess, spot those brands?
I guess the obvious one is this brand buzz or how much traffic or even revenue comes from organic versus paid customer acquisition. Because as a business starts to kind of take off and grow, obviously you need some fuel to the fire and you need some marketing to discover and acquire new customers. But the best brands usually grows organic pretty quickly, and organically, where if the product's really good or even the proposition really resonates, it doesn't necessarily need to go viral, but there's definitely strong affinity and evidence of either the same customers coming back or their friends, wider cohorts, communities, and often actually around the world, buying directly from that business and that brand without actually, almost seeing any advertising. And I think that organic versus paid traffic split is quite important, as is loyalty in terms of, for those customers, for example, who bought once from you, what percentage came back to buy again. That's pretty telling metric usually.
Yeah. Is there anything else you see, or do you sometimes use your gut feeling when you identify brands?
I mean, a lot of it is about gut. To be honest, I think gut feeling I apply more not necessarily to brands, but the teams and founders. And I often actually liken it to a bit like speed dating, Investors usually at the first pitch meeting, you have half an hour, maximum an hour where you just meet. And yes, you want to figure out, well, what's the brand? You usually check them out on Instagram or website to have some sense of what the business does. But then there's this magical 30 or 60 minutes where you need to figure out, can you back this person? Would it work? Do you want essentially to be in the same room for years to come? And yes, you think logically, does a business work? Is it attractive? Do the metrics make sense? But gut plays a lot of or very big role in terms of judgment of people, even though obviously you don't want to be biased and you need to often think outside the box. Gut, and actually it's, I think, a strong female trait in particular, in terms of how we relate to people, how we build relationships, how we make judgments. Gut is a big part of it.
Yeah. And if you had to articulate that gut, what traits are you looking for in a team and a founder?
I guess the drive and ambitiousness is a big one, because I mean, you're growth stage investors. We don't do turnarounds. We don't tend to back, lifestyle businesses. Inevitably, we want companies who want to make it big. They don't need to become unicorns or, take over the world, but there needs to be growth ambition. I guess resilience is probably number two, because especially in early stage growth businesses, I mean, it never goes to plan. I'm sure you have seen it yourself. You need to adapt strategy, you need to adapt business plan, you have daily crisis, weekly crisis to solve, and sometimes you have fundamental crisis to solve. So that resilience is really important. Yeah, I guess ambition and resilience are probably two key ones, and I could name 5 more, but I think to kind of keep it concise, I would say those two are most important.
How would you assess resilience in a, 30-minute meeting?
I think you get a sense from why the business was started. I always love to hear the kind of story of why, what they have done to date, have they had situations. And I mean, to be honest, usually I'm actually amazed in terms of what I think we last met, we were at Every Woman Awards, and I was one of the judges, and you go through all the categories and details of stories of what these women have overcome to be able to become entrepreneurs, and not just become, but successfully raise kids alongside great business or handled often 5 other crises. And it's actually remarkable in terms of how multitasking you have to be. So I think, yes, not everybody needs to go through super big crisis to be successful, but you get a sense pretty early whether it has been, easy hand on a plate from, family trust fund, and it just we'll have a go. If it doesn't work, we'll try something else, or whether that business is literally your baby and your whole life, and you'll do anything to kind of make it work, which I think is makes a big difference.
And what do you like to see in an investment pitch if it were a formal pitch to you?
As an investor, I normally go through 4 boxes or 4 ticks. One is business model. Is it attractive business model to back? Is there at least some level of differentiation? What they are best at doing it. Do they have right to win? And are they winning versus competition? Second tick is the market. Is it a growing market? Is it a market we want to play in? Is it local versus global? And both answers could be okay. It doesn't need to be like necessarily global, although it does help with revenue diversification. The third one is team, in terms of not just original founders, but do they have ability to attract talent which are complementary to them and retain talent, and the right mindset to hopefully listen and work with others rather than be kind of stubborn and super. I mean, you need to be stubborn, but like to take on external capital, it's pretty important that you can work as a partnership rather than just do your own thing. And then the last one is, I guess, financials and deal numbers need to make sense. As much as I would love to back lots of amazing women I have met through my career, sometimes I just know that number wise I couldn't get through my C. It just wouldn't work. So numbers need to stack up. So that's 4.
Yeah. And how should an early stage entrepreneur approach valuation if they don't know where to start?
I would say that my preference, and I have heard it from other investors, is not to put valuation expectation in your deck, but usually actually have it as a conversation, because first of all, you probably want to speak to investors or prioritize speaking to investors who understand your space, who might have done something else in a similar sector, and also what their mandate is. Is their mandate to double money, triple money, make 10x to returns the whole fund? Because most investors, when they think about valuation and what equity stakes they need to take, they will back solve based on what checks they're writing and how much they need to sell it for on the way out to make the numbers stack up. And then often valuation, especially at very early stage when you don't have maybe super long track record of revenue and profit generation, it becomes a risk reward based on what fits their mandate. So I would say different investors might have different views on valuation, and it's probably easier to actually have that conversation, and you can do research, obviously, or speak to other founders they have backed in terms of how the individual fund works. I think it's harder if you literally put, we are raising at X valuation, and then you distribute the same deck to many, many investors. I just don't think it's that helpful.
Yeah. So have a conversation with the investor, ask them what their mandate is and what their return expectations are and what their valuation expectations are.
Yes, absolutely. And how would they approach valuing your business? And then I think what is important is that I recognize that in the current market, it's really hard to fundraise for almost anybody. I think it's actually better to walk away and do a bad deal. And it's not necessarily down to valuation, but actually underlying terms, what actually the founder signs up to. Is there any, I don't know, crazy liquidation preferences attached, or what is there an options pool, for example, that you can actually incentivize team around you? So having knowledge around what normal term sheet looks like, what are the pitfalls to look out for, and I guess it comes back to speaking to people who have done it before, getting either a friendly lawyer or other founders who have been through the same journey, because often valuation you can really massage. I mean, you can show the same number, and actually once you run the numbers in Excel, who gets what on different scenarios, it looks really different. So I would say don't focus on valuation, focus on underlying basics, and just, I don't know, make a simple Excel file. If I sell more my business for XYZ, or if I need to raise again in 2 years, what equity stake I get, what equity stake investor gets, how does they just waterfall and cash flows look? Because you need to work with real, I guess, numbers instead of get hooked on a kind of one valuation top line number, which actually is meaningless often.
Yeah. Do you find any common themes in founders, I guess, in terms of expectation mismatch, like with the investor? So once you get a founder on board or a business on board, is there any expectation mismatch in terms of, like, I don't know, reporting, communication, like whatever it is that you need to educate them on?
Yes, it definitely happens. I mean, especially last few years, it's fair to say that across the market, there are lots of businesses who raised money at top evaluations, I don't know, 3-4 years ago, maybe even 2 years ago, and the financial forecasts haven't matched the expectations. And then it usually, of course, it's hard because investors feel that they have been let down. Founders felt that they have worked harder than ever, and they have managed the crisis probably in the best way possible. And yet it feels like it's never enough. So I think there is always tension. And even if things have gone according to plan, sometimes they have gone almost too well, and there's kind of different issues. So it's very normal to have different expectations, but you just need to work through it. I think I've done maybe 20 deals in my career. Once you have seen it more than once and gone through different journeys, you just have, I think, calmer mindset and a bit thicker skin maybe. You just learn how to build relationships with people and makes them last in a constructive manner, even if things get heated.
Yeah, it was a difficult period for everyone, investors and founders, right?
No, absolutely. I know it's, I think it's a crazy world we live in. I just hope maybe 2024 is calmer for everyone.
Yeah. Do you see a better trend for female entrepreneurs and female investors in general in your space?
I think that there is more and more funds like BGF. I mean, we have also just become B Corp, who are signing up to initiatives and actually trying to do the right thing rather than talking about it. So I think the change is definitely happening. Of course, it always feels that it's happening too slow and we should do more. I think there's plenty of opportunity, both for, I don't know, girls who want to become investors themselves one day, and also founders who want to found businesses and attract investment. I think my key advice is to really be bold, follow your dreams, surround yourself with people who make you strive, and don't give up. And I guess even if people challenge, and you'll always get challenged, I mean, in any kind of situation, I think it's very important that we get the right role models so that the girls growing up, and I guess the next generation, can see that it's possible and it's normal. It's not super unusual. And yeah, I'm definitely very hopeful. I'm normally an ultimate optimist. So of course I would be hopeful. But no, I think that good things are happening. I just wish we could all work together better so that they can accelerate change.
That's very inspiring. Before the recording, we talked about that EIS, like high net worth threshold being changed, which is a huge topic right now. Can you tell our audience a little bit about that and what your thoughts are around that?
Yes, I mean, I have seen a lot of people being shocked about it, as I am. So I guess regulation in UK has changed that to qualify as an angel investor of lots of firms, you need to have a minimum earnings threshold, which I think has gone up from 100K to 170K. And when you actually look at the hard data, it means that female angel investors in particular will be disproportionately affected, because there's obviously lots of female investors who might not be earning 170 plus and do want to invest. And there's clearly a strong correlation of women supporting other women. And there's actually quite a few angel networks where successful women are trying to specifically target other female-led businesses to help change and grow the whole ecosystem. And I think it just became harder, which is actually shocking. And I think there's lots of initiatives to try to undo it and change it. So let's see what happens.
What do you think was the motivation behind this initially?
I actually don't know.
Yeah,
I think, question is whether it's more cautious look on regulation, so that almost need to protect retail investors themselves, so they are knowledgeable in terms of where the money goes, illiquidity, and all the associated risk. But I actually don't know.
Yeah, I guess like they didn't see the byproduct of this.
Yeah,
that
I
it's
mean, exactly.
disadvantaging female investors.
Yeah, I hope it'll change. I would hope.
What's one advice you'd give a founder at an early stage who's starting a brand? Because that's like our core audience.
To always think about the customer and why they buy from you. Because it's easy to get lost in detail in the internal challenges of who does what, how I grow the team, how I solve logistics, how I solve everything. I think if you always look from customer's perspective, you can focus on things which really matter.
Yeah, I completely agree. Such great advice. Simple and effective. Thank you so much, Daina. That was so inspiring and informative.
Thank you so much for having me.
Thank you so much for listening. Don't forget to follow the podcast wherever you're listening or watching. You can follow me at Connie Nam, Astrid Miyu at Astrid Miyu, and Unboxed Instagram page at unboxed_founder confidential. See you next week.